Hello and welcome to Stock Up with Larry Jones. Let's get right into what's going on with these crazy markets. As you can see, U.S. stocks tumble as companies and consumers worry about tariffs and Washington. Dow falls nearly 750 points. As we look at the indices, we could see that today was a major sell-off day. We had major selling off. We can look, the S&P, NASDAQ, and the Dow all down. Look at this, 1.5%, 2.18, 1.7, should I say. This is almost 1.7. For those that are just buying the overall markets, these were the only some of the good buys today. If you ask me, you have to be a stock picker in a session like this, but sometimes on days like this, the best thing you could do is to sit still. But it's hard to sit still when you're falling, right? Let's look at some of the growth stock. Some of the growth stock, we got Nvidia, Tesla, Palantir, and we can see the growth stock got hit hard, okay? So it is one of those days that the further up something ran, the further it fell down. Listen, I have a lot of bad news, but then I have some potentially good news at the end of this, so please stay tuned. Trump tariffs target the industries with big trade deficits. Huge tariff deadlines loom. Now, just a few months ago, we were talking about the Trump trade, and some would say we're experiencing the Trump fade, all right? So we got, a president that was supposed to be pro-business, and because of his tariffs and all of the government firing, some would say it has been anti-growth, okay, with the tariffs, the governmental layoffs, and the immigration, which is going to affect the job market. And into somewhat, it would affect the housing market and GDP. So some are saying, not me, some are saying that the pro-growth president is actually, his policies are anti-growth. And we are going to experience higher inflation and slower GDP because of his mandates. So a lot of people, I've always said this, and every economist knows that tariffs causes economic slowdown and it causes a reduction in GDP, as we can see here. It doesn't matter who does it. These are just the way that it happens this way. Now, we all know that this was a bargaining chip, and he really don't want these tariffs to go through, but we know that he's using it as negotiation. We're not going to get into politics here. You discuss that amongst yourselves. We just look at politics as it pertains to our money, but we can see clearly that the stock market does not like these policies. So let's see how long this lasts. All right, so now we got retail, and retail sentiment is not good. We got companies like Walmart. Look at this. Walmart says it's not going to be completely immune from Trump's tariffs, just like I said about a month ago. All right, so we're going to feel some pain. It's going to be some pain, and everybody's going to feel it. No one's going to escape this. Let's just hope that it is a short-lived, all right? I got more bad news for you, but I have some good news coming, so please hold on. Chinese team finds new bat coronavirus that could infect humans via same route as COVID-19. You just can't make this stuff up. And what's crazy about this is on the anniversary of the pre-COVID top. What I'm talking about is this. If you go, let me expand this for you. If you go and zoom out, right? Take the S&P and zoom out. You can see there the S&P, and I want you to zoom out 5 years. You could see that this was COVID, okay? Right? 2020, March 20th, right? That's when it hit the stock market. If you go out to the max, here's COVID right here, good people. You see that? There's COVID right there. See? Right there, right? But as you can see, before COVID, this is all post-COVID, but before COVID, this was the market high. Now, the current president was president at the time, as you guys know, but you could clearly see that this was the market high. As a matter of fact, if you you can go back to, if you want to rate how the market really was under his presidency, just go back to January of 2016, and then go here. But we can clearly see that if we were at a market high on today, okay, on today, look at that, February 21st, 2020. And then what happened? COVID hit. Boom. So it is amazing to me that this report would come out on the same day as the top of the market pre-COVID. You can't make this stuff up, good people. I just want to bring you all this information so you can make an educated decision for yourself. All right. So what else is happening? Well, that was the stock market. What about crypto? Well, we got more bad news. All right. Bybit has fallen victim today to one of the largest crypto hackers ever recorded. Look at this. With hackers reportedly stealing over 1.4 billion worth of ETH from the exchange cold wallet. Okay, from the exchange's cold wallet. You see that? You can't make this stuff up. Now, in the past, these were the very things that caused crypto winter to happen. Good people, I can't just give you the good news. You have to know everything that's going on. Having said that, actually, Bitcoin is actually holding pretty good at 95. But what happened before? If you go to the day, Bitcoin actually was running up. You guys see that? Look to the top there. Bitcoin was running right back up to 100,000. We were at 99.4-ish, okay? And then here comes the news, and it comes all the way back down. And if you remember, just a few weeks ago, the exact same thing happened. Bitcoin was going back. It actually went back to over 100,000. And then soon as it hit, the bad news came, as if it was controlled chaos, as they call it, controlled chaos, as though someone wanted to hold it off until they could get their positions and then let it run. I'm not saying that's happening, but it is quite evident to me that every time Bitcoin heads north and heads back to 100K, some bad news happens, and it releases it, and it causes it to fall. You leave me a comment. I mean, if you see that, okay? So conspiracies are conspiracies until they're proven. All right, now we have consumer sentiment. The University of Michigan came out with this consumer sentiment. Larry, is there more bad news? I'm afraid there is. Okay, so their survey was saying that consumer sentiment extends its early month decline, sliding nearly 10% from January. The decrease, you can read this for yourself. They're just saying that consumer sentiment is negative. All right. You can read all of that for yourself. I just want to keep this one going. And this is a good article so you can see all of these things hit the market today. It was like a machine gun, a barrage of bad news. Now, let's listen to Mr. Tom Lee, and let's see how he sees all of this bad data. Please listen to this entire video.
You're seeing a contrarian bullish signal here. What is it?
Well, it's a couple things, but I'd say what really stands out to us is that the market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks.
So you're not concerned about some of the data we've gotten? I mean, that University of Michigan consumer sentiment reading this morning in particular seems to have spooked investors, given the fact that it cited broad declines across age, income, wealth groups. You also said that big spike in year-ahead inflation expectations. That was unchanged, but the 5-year expectations moved higher, too. At what point does that start to manifest into something more meaningful in terms of a slowdown here in growth?
Now, I want you guys to pay close attention to how politics has a major effect on this, okay?
Well, these inflation expectation surveys matter to the Fed because they are concerned about whether or not consumers are actually raising their inflation expectations, and that would in fact be bad. But we have to keep in mind the UMich surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically zero. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution in that data, and I think it's probably pretty typical what happens when there is a change in administration, but I hope the Fed is aware of that political dynamic.
So, Tom, if I recall, in Q4 last year, you were warning about market turbulence, and we've been right now at around S&P 6,000. We're at the level where we were a month ago, a month before that, a month before that in late November. Should we also expect turbulence at these levels at this point, given that the macro narrative and the political landscape is still unclear?
It certainly seems like it. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner, which would be positive for stocks.
So you guys heard all of that, and I agree with that. He could, if things get worse, the Fed will start to cut again. And of course, there's talk that the Doge team, if they the money that they save from the government, that there will be stimmy checks and cut to us. All right, that's just talk and hearsay at this point until it's a fact or a lie. All right, so. Tom Lee is very bullish, and he thinks that this is, he thinks that this is a buying opportunity. You guys let me know. Did you buy anything today? This was a day that I mostly sat still, of course. So I just wanted to hit you guys with this news. Hopefully it helps shine the light on everything of what happened, where we are in the market, okay? And because I'm not active on this platform, and I thank God for the help that I've had from all of the guests, I am posting all of my moves and my money moves. It is not connected to Patreon, but it is my version of a Patreon. It's solely on the WAP app. You just click the link and you're in there, okay? I could shoot that from anywhere while I'm traveling, while I'm with my dad, taking care of my dad. I, have CNBC on in between times when he's asleep. And so I can simply make a post there. All right, good people. I'm planning on returning sometime next week. Keep me in your prayers. Hopefully this helped you. We'll see you later. Live, love, laugh, and learn. Have a blessed weekend.